What is up, everybody? We are back for another episode. Bullish top stocks to watch this week and why. I am still joined by Jane Wagner Tell over here. Miyagi just hanging out. So let's just jump into it. But before we get into it, actually, a couple things. Hey, these are only my opinions. Of course, do your own due diligence. These are things I'm watching, not necessarily playing, but might play them along the way. Also, give us a sub here. Help us forget about ourselves. Give us a sub on YouTube. That would be cool. And also follow real_bullish wherever you get your social media poison. Let's engage. I love having conversations with everybody that watches or doesn't watch, just interested in stocks and wants to like kind of ping pong some ideas. Anyways, jumping into it, let's go. I'm gonna start off with my baby Apple. And Apple, this is like a post earnings play. I got a post earnings play, I got a pre earnings play, I got a speculative play. This is gonna be my post earnings play. They had earnings actually on 127, and they had a huge beat, right? They had a beat. But at the time, Wall Street bet stuff was going on with GME and AMC. So they didn't get the love that they deserve. And basically, right now I'm looking at the month chart. Already the month chart looks good to me for a few reasons, and I'll go into that. You might be able to see that little thing that I'm looking at right now. But anyways, the earnings was insane. They had earnings of 11.4 billion for Q1, which is an increase of 21% same quarter year over year. Now there's some shit in there too because they had their iPhone was delayed a little bit, to supply chain COVID, supply chain constraints and stuff like that. So some of that was pulled forward, I guess, or pushed back some of those earnings. But still, so it's a little bit messy. iPhone still makes about 60% of their revenue, which is great. But also services and wearables are moving up. Quick one on services. Services were actually up 24%, same quarter year over year. Also, well, that's an increase of a $3 billion. Wearables about the same, $3 billion, up 30% same quarter year over year. So not only are they growing, they're services and wearables are making that kind of jump as well. Actually, Apple, if you look back up over time, man, they're up fucking 1,000. Look at this shit. Look at this. Each tick is a month. They've been up 1,000% in the last 10 years. Crazy. I'm not even going to mention the whole Kia plus Apple car. That's Apple's sinking about 4 billion, 3.6, I think, billion into Kia to help them build the Apple car. It's going to be basically, and Kia. I think I read that the Kia kind of management is kind of like feeling some type of way. They're kind of split on that because Apple wants a lot of control over it, and that's not going to be anytime soon. That's going to be like on a 5-year, maybe plus time horizon to getting something to production. But I think we'll see a lot of cool buzzwords and catalysts along the way, like AI and EV. It's going to be an AI powered EV car. Oh my God, that's going to be amazing. Will they even have a fucking steering wheel? I don't know. But anyways, interesting to see what's going to happen to that over the next 5 years. So I think those are all things to do. And all that to say, hey, I look to invest in Apple versus trading it. Trading and investing, two very different things. Apple to me isn't really a good trading company because it moves to me it moves slow and it's boring. But over a longer time horizon, it's something that you want to invest in. Any kind of pullbacks, any kind of dips you get, perfect opportunity to get back in and hold that bitch for like fucking 10 years or whatever the case may be. But anyways, looking at and those are just a few of the things. So I wanted to see what they were going to do for this Q1 earnings to kind of see they're moving, they're growing still, double digit growth in a lot of different sectors. They have new shit coming up like wearables and home, like I said, which are making up a difference and eating into some of that revenue that is brought up by the iPhone. But anyways, look at this fucking sexy ass cup and handle at the month level. And like we said before, hey, you see the first lip, you see price rising up, you see that first level of the lip of the cup, you see it come down, you see volume over average, people selling it. And then at the bottom of a cup and handle, usually, or saucer or whatever, I get them confused. This is a cup and handle for sure. But at the bottom of it, you see sellers getting exhausted. Do you see right here? The buying comes in, but it's not over average yet. But that volume doesn't come in until the handle makes. So basically, for a cup and handle, you see this. Sellers come in, blah blah blah. They're fucking getting hard on for this shit. They fucking stop. They stop. Buyers come in the next month. This is because we're looking at the month. They come over. But for a true cup and handle, you have a break of the first lip. But then you have a retracement back down here. That's the handle part is what we see. And now hopefully this month buyers start coming up and really filling this up. I like the cup and handle here. It already broke. It's after it breaks back up, I think we'll see a lot more volume coming, especially looking at the month level. It's early in the month, so we still don't have the volume, but it looks good so far. RSI is coming up. It's at 75. This can trade all the way up, 84 plus. MACD is still kind of moving along there upward. So I like that. If you break it down at the week levels, a little bit, it's a little bit grainier at the week level in terms of like the pattern, but still you see this break here. People selling off. It's kind of similar, breaking down more. People are selling off. Hopefully the volume comes back up, which it looks like it's gonna do to break these two lips RSI is still moving up. It's not as pronounced like RSI 65, like we said, 30 to 70 is kind of that window. MACD still coming around. So man, that's how I do it. I step back the month, step back, the week, looking at the day level, still looking pretty good. MACD, the closer one, is coming in here. It's kind of stabilizing to go up. We see RSI poking down a little bit because it's finding that resistance here. It's the resistance that it broke before, to come back and retrace and go higher, or try to at least. But anyways, I like that. Once it breaks this, that's going to be a positive sign for me to start getting into it. I'm actually, I played a little bit before. Probably shouldn't have done that, but I felt comfortable with it. But once it breaks this, I think we'll see that volume start coming in and hopefully use this as support. To then go off. Right now, it's resistance, right? It hits this line, it's resisting it. Hopefully, once it breaks that, now it uses that line of support. The adage is old resistance becomes new support and vice versa. So hopefully we see that come in. I'm not going to break it down a little bit. I mean, these are like swing trade. I look to swing trade these more than because day trading Apple, good luck, because it doesn't have the volatility there, but it has the growth. The other one I'm looking at is Advanced Auto Parts. This is the pre-earnings. They have earnings on 2/16 before market opens. That is next. 2/16 is next Tuesday. So looking up like a week and a half ahead just to get those movements in there. But I like Advanced Auto Parts for a few reasons. One of them is, consumer cyclical, man. That fucking shit's hot. If you look at consumer cyclical at the day, the month, like grouping rise. If you look at industries, like or groupings of industries like tech or consumer cyclical, consumer defense, consumer cyclical is at the day, week, month, 3-month, half year plus level. They're in the top 3 bangers for groupings. They're maybe not first, but they're in the top 3, which is pretty consistent when you look at groupings across those different time horizons, which is really good. But also what's interesting to me, if you look at consumer cyclical as a grouping over the at the half year level, right? And look at it this month versus last month, which I did, consumer cyclical actually moved from 3 to 1. So in that month, it's actually moved up in ranking to number 1 spot at the half year grouping level, which to me signifies that people are consumer cyclical was steady hot, and now it's kind of heating up on your longer term looking forward horizons, which is what I want to do when I'm going to invest in a company. I want to make sure that grouping is not like last. I don't want to fucking get in fucking utilities or something that's like last place. I want to be in like the top 3, top 5, hopefully first. And that's what it is for consumer cyclical. But anyways, it's a hot industry, right? Consumer cyclical. But also I think that it's kind of like going with trends of what's going to happen. Because people are keeping cars longer, and that's exactly what Advanced Auto Part is looking. Man, he's lazy as hell. Look, that's exactly what it's a different place for me. It's a reopening place. People start driving more. It's a stimulus play. People will get more money they invested into their cars, maybe, and also market trends. People are holding maybe their cars for longer at this point. I know I did. I paid off my car to keep that motherfucker forever. It's actually in the shop right now. I just kind of because I'm like, hey, I'm gonna keep this for longer. Let me take better care of it. So that's exactly how I'm doing it. So I would assume other people are kind of doing that as well. And then once shit starts opening up, taking that bitch on the road more, going places. But also I'm working from home more, so I justify that I can keep my car longer because I'm not going into the office as much. And now my drives are more when I want to drive versus when I have to drive. Anyways, that's just a few things. But also looking at this in terms of, let's just step into it a little bit. But looking at this channel, it has clear channels to me. And this is looking at the month level, so a little bit further back. I just wanted to step in and get my resistance levels. I look all the way back. I see, hey, this is a resistance here. This is some resistance here. And that's exactly how I step. This is some support. This is some support, where the lines are, where the price action is respecting price targets or resistance and support. That's how I kind of step into looking at it at first. But also, like I said, they have earnings on 2/16. I know I'm jumping through it a lot, but basically, like I said, they have earnings on 2/16. And the earnings are supposed to, if you look at the same quarter year over year, the estimates are looking really good. I mean, not amazing, but basically, if you look over the same quarter year over year, you're looking at a 45% estimated growth for EPS, which is really good. The last 12 quarters, if you look at the last 12 earnings reports, not quarters, earnings reports, they've actually beat expectations 83% of the time. Right. So that makes me feel confident that, they can beat again, that I'm looking at these estimates the right way. And over the last 6, earnings reports, they've raised 66% after earnings. So let me back through that again. Their earnings are expected to beat last year's at the same time by, a 45% increase. Also, they usually hit their earnings 83% of the time over the last 12 after the last 12 earnings. And also over the last 6 earnings, they've raised after they announce earnings the day after. So I like all those things together. That's kind of step through my logic in looking at something when I'm playing earnings. But yeah, I like those things. Also, if you look at the price action is actually off by 12%. What I mean by that is the current price of advance is about 157 bucks. The average analyst price on Yahoo is $176. That's an over 12% difference. So that could be a little telling in terms of like why is it so low compared to what analysts are saying. But anyways, like I'm not worried all about that right now. That's just one area of concern for me. But yeah, I like advanced auto for a lot of different ways, and I'm trying to get better at my value fundamentals. So I was looking at their balance sheet, their cash flow, and shit like that. And basically, they're not too bad. Their financials look good, strong balance sheets, reasonable price compared to people in the industry. They have a price to cash flow ratio of 11. Generally, you want that to be between under 15 or 20. It's going to be relative to other industries. But what I'm saying is that like it's compared to it's under 15 or 20. So you're not overpaying basically is what I'm saying for this yet. There's still some value there. It's kind of like middle of the road for their competitors, but still it's not the highest, it's not the lowest. And that's exactly where I want to be. I don't want it to get like at a super value because just because lumber's super low doesn't mean it's a great investment, but because it's not over it's other peers, it's kind of like in that middle ballpark. I'm comfortable with it. I'm not paying too much for it at the price now. But also what I wanted to show real quick as I step through, because I'm going to go through these 10 minutes or less. Fuck, I'm already 11 minutes. Damn, 15 minutes or less. All right. What I like about this is it's a clear channel here. What do I mean by channel? If you connect these low points here, that's what I want to do. I want to make a channel. And looking at the week level, it's in a clear channel, right? And then what I like about that, because I can use that to judge what I'm going to do. Break it down to the day level. So week level, hey, looking really good. You see price action trying to come back up. And when I like to do the week level, at the week level, I like to see it right before it tests this 10 EMA. So looking back 10 days, the moving average, I love it when it's like at this point ready to break out because I try to catch them right here. I mean, catching it here would have been the best, but it's kind of too far off. And that's a weird turn for me. Like, damn, what happened there? I didn't see anything that happened, but that was a weird one to me. But what I love about that, it solidified this channel. It's selling off to this channel. It's selling off to this channel. Now, hopefully, it uses that as support as it goes up. You see RSI coming in. You saw last week volume over averages coming in. The MACD is a little mixed, but still looking good. Not too bad for me. And if you break it down to the day level, the MACD wants to cross up. It's rounding to get a little bit bullish. The RSI, see all these are kind of like mixed because the RSI isn't like necessarily selling off, but I want to see it go up a little bit. But we did see kind of a sell off here as it's trying at the day level to break these moving averages. But what I love about that is I'm going to use that as my price support. So if it breaks below this, I'm gonna wait to see what it does. But if it breaks below this, I feel confident that I can average down. You shouldn't do that. But basically, since this channel is solidified to me, I feel comfortable getting in at this being my support level. Hopefully it's this, but if it breaks that, hopefully it's that. You should never hope. But anyways, I wanted to stay here. If I get it at this price, that's fine too. But the best option in me would be buying it here if it continues to sell off. It doesn't look like that can be the case. Maybe short term because you see some of that sell off. But basically, what I'm going to say is, hey, I'm going to use this number here, 167. Hopefully, the top of this channel as it did before. So like 178 as my first price target, second price target. But also, I'm going to probably use this as support. And if it breaks that, sell off real quick. If it breaks this, my plan is if it doesn't hold this line, I'm going to sell it real quick, take my 1% loss. I keep a really tight stop loss and then wait for it to bounce off of this, off of this channel below here. We'll see how it plays out, but I like advanced auto parts for a lot of different reasons. I looked into them a lot. I looked over the balance sheet. I was happy with them. They have 16,000 jobs openings. So I really like that about them too. All right, I'm keeping the A's going. Apple, advanced auto parts. And now I'm going to go to Airbnb real quick. Like I said, I'm trying to keep this 15 minutes or less. Right now I'm at 14 minutes. So anyways, another one for me was Airbnb. And I like this one as a pure speculative play for me. So I've been meaning to circle back with Airbnb, and now I'm just getting the opportunity to do it again because as vaccines are going up and COVID vaccines infections are going down, I think that people are going to want to travel again, right? We're going to want to do it. We want to go out there and hit the open roads and fly different places and even work remote. Now the trend is more people are working remote, so that's exactly how I'm going to do it. Once shit starts opening up, I'll probably drive somewhere, fly somewhere, and work remote, like in a different city I want to go to using Airbnb. And I think more people are going to follow that trend. And I think so. That's why I think this is kind of like a reopening speculation play for me. There's not a lot of competitors to Airbnb either. I've been meaning to come back to them. I just haven't done it. This is a perfect time because I had a bunch of A's in there, and already I wanted to get back in Airbnb. But perfect time to look at it. And what I like about this also is a cup and handle on the daily again. We see that cup and handle pattern here. I have a quick Fibonacci retracement. If you don't know what Fibonacci is, look it up. But basically, it's super easy to layer it on top. What I love about that is at 38 and 61 are two important levels on the Fibonacci, the two most important levels actually. And what I love about it, if you go from the lowest to the highest to see where it's going to find support, it actually did that at the day level right here. So basically, similar as we looked at with Apple at the month level, you'll see this hopefully cup. You'll see the handle start forming. So I think in the next week, 2 weeks, this is going to be really interesting one. I might just get into it now and say fuck it, because I've been wanting to get an Airbnb for a while, and I feel really confident about not the fundamental level, but the story and how reopening and stuff. So I think there's a lot of value there. I think once you start breaking this level here, and that's exactly what I have an alert when you break this 201 level, it's going to be really really hard because two things, because it's an important area at the zeros, like 100, 200. But once it breaks that again, man, once it breaks 200 for the first time, usually, you get a 230, 240 going price. And that's going back to fucking 100 years, reminiscence of a stock operator. He says it basically in there, that 100, 200, 300 level. Once it breaks those for the first time, you're going to see that bitch start moving. That thing start moving. So I like this as it breaks this again, as it breaks 200 and finds support there, because I do think it will do it eventually. I'm looking to really get back in. But what's keeping me away is it doesn't have a lot of history yet. I mean, it just started trading fucking 1210. So it doesn't have a lot of history. I wanted to build some history so I can then go off of it. But anyways, it looks good to me. Like I said, hey, I'm looking at Apple because it fucking demolished earnings, killed it. It's showing all the signs I want to see for a long-term investment. Advanced auto parts because it's in a hot industry and it's, there's still really good value there. Airbnb has my speculation looking at this week because it's going to come close at the day level to start breaking this. And that's exactly what I want to see at the day level. This was only a few days ago. This is 127 where it hit that and then kind of, it's wave theory, like shit doesn't go straight up. You don't want it to go that way. You need to follow these trends and shit and then follow it that way. So I think those are really the three bangers that I'm looking at this week. Again, follow real_bellish wherever you get your social media poison. Help us. Miyagi's still hanging out there. He's not dead. Trust me. He's just hanging. That's how he sleeps. Give us a follow here on YouTube. Follow real_bullish wherever you get your social media poison. I love getting ideas from people and talking shit, talking good stuff. Stay bullish. Good luck to all. Remember, wash your hands, wear a mask, social distance, and everyone have a great week. I'm excited for Monday. Peace.